This is Ed Salami. Oh, there we go. This is Ed Salami. I'm the Executive Director of the Professional Captains Association, or PCA. I do want to thank everyone for joining us tonight to Navigating the Perils, as you can probably see on your screen. So tonight's seminar, while admittedly it's not the sexiest, it's extremely important for professional boat captains. And of course, that's marine insurance. So, and I also want to mention too, I have to always do a pitch for the association. So if you're interested in joining Professional Captains Association, go to procaptains.org. You can find out all about our great member benefits that we have set up for professional boat captains. So you can also find my email there. You can reach out to me with any questions you have. So going back to tonight's seminar, again, called Navigating the Perils, we have with us tonight Brendan Crawford from Carey, Richmond and Viking. Brendan, I'll let him speak about his experience, but I believe Brendan has, 14 years experience in the industry, and he is a boat captain as well. So Brendan, why don't I turn it over to you, sir?
Sure, thanks, Ed. How's it going, everybody? I guess I'd start off by just thanking the PSA for the opportunity to speak tonight. This is Navigating the Perils. It's an introduction into the world of marine insurance, but before we hop into that, I guess I'll just speak briefly about myself. I am a licensed commercial insurance agent for Carey, Richmond, VikingInsurance. Carey, Richmond, Viking is the largest commercial insurance agency on Aquidneck Island. We're locally owned, and we have over 8,000 accounts through southeastern Massachusetts through 3 locations. Prior to being a commercial insurance agent, I spent 14 years in the marine trades. I got my start sand and bottoms in North Kingston, and worked my way into some marine construction and running boats, and ended up licensed as a captain and ran boats throughout the bay and ran the waterfront operations at Jamestown Boatyard for a number of years. Without further ado, I guess I'll get started here. So first, I just wanted to go over some basic definitions of insurance. You know, insurance it's a form of risk management in the form of a contract. Basically, it's the transfer of risk to a third party through a legal contract. The individual or entity receives financial protection or reimbursement against losses. Risk management is an important aspect of running one's business. The contract in which one party agrees to indemnify the other against a predefined category of risk in exchange for a premium. These are all the basic definitions of insurance. If you were to look further, you would see 100 others that are a little more simple to understand. But basically, the big thing that we like to hammer out to people is that it's a form of risk management through the transfer of risk to a third party. Some other basic definitions, and most of you guys may know these already, but a loss is the basis of a claim for damages under the terms of an insurance policy. A risk is an uncertainty, a possibility of loss. Exposures are the risks for which an insurance company would be liable under that contract that they've written with the insured. Peril is the cause of a loss. Here we have the basic structure of my presentation tonight. Part 1 is the historical roots of the modern insurance market. Part 2 is the common types of marine insurance and their role in the marine trades. And part 3 is a little section on protecting employees at sea, workers' compensation, and Jones Act coverage. Part 1, the historical roots of the modern insurance market. So insurance started, the earliest forms were in 5000 BC in China. You had Chinese merchants that were beginning to trade and found that it was a smarter practice to spread a shipment of cargo across a fleet of vessels rather than put it all on one vessel. If that vessel were to go down, they would lose their entire shipment. By putting it over a spread of vessels, they were able to control the risk. Then we look into the Code of Hammurabi, and we start seeing something called bottom-re contracts. Bottom-re contracts are basically, they were the first time we saw third-party contracts where someone would go for a refit or investment loans and offer the ship as a security. These contracts were written with terms, and they were written with listed perils. The perils would allow the ship owner to avoid a total loss. Finally, we get into a Rhodian sea law. This was written during the Byzantine Empire, and it was the first known legislatures of the sea. These laws were written so that losses would be covered by others, rather than only covered by the ship owner. They were written mostly about cargo, and they allowed cargo to be sacrificed to sea in the event of a storm. The real biggest roots of the marine insurance industry are in the British Empire. As everyone here knows, the British Empire spread across the entire globe. The British East India Company, with its extensive trade of tea and other products, spread at its height from North America through Australia, Asia, the Pacific Islands, and created an extensive network of trade amongst the empire. At this point, we meet a guy named Edward Lloyd. So at this time in London, the newest and greatest invention was coffee. Everybody was drinking coffee. The British Empire relied heavily on their merchants, and these merchants typically didn't have offices, so they would do their work in coffee houses. Edward Lloyd had one of these coffee houses. Soon he started to recognize that his coffee shop was becoming a hotspot for the most successful merchants in London. Here, merchants would meet, they would talk about shipments, they would talk about captains, and Lloyd started to identify his regulars as a successful businessman. It's always a good idea to know your market. He began to promote the shop as a networking center for his marine merchants. So he created something called Lloyd's List. So this was the first comprehensive list of all marine traffic, shipments, and commerce. He would go through his entire network of customers, get all the information he could, and publish it all in one document. Successful merchants began to rely heavily on this document. And in fact, Lloyd's List was more popular and more comprehensive than the own British Navy's list of traffic in the area. Successful merchants started to hedge bets on the best successful ships and fleets. Soon, when a ship owner wanted to mitigate his risks, he was able to spread that risk across a pool of investors who were willing to invest in the successful ship or fleet. Smart investors began to study. They began to underwrite before investing in a risk. This is an important case that I'm adding into this presentation. It's known as Mill's Frigate in 1764. Anyone listening to this presentation right now knows much about a survey. This is basically the foundation of the modern survey. A French vessel, which was supposed to bring a shipment of sugar, basically could not finish its voyage because the bilge continued to fill with water. The ship had to divert to another port, and further investigation in court to decide who was negligible and who was responsible for the shipment of sugar found that the ship had been badly neglected. What was the outcome of this case? Basically, that ship owners can no longer hide the defects and the neglect of their vessels from people that wanted to invest in the product. Investors began to survey vessels before deciding to place insurance. Today, Lloyd's of London is a complete monster in the insurance industry. Lloyd's writes 35.5 billion of gross premium through 350 brokers. They're known mostly for high risk, but unfortunately for all of us, the marine industry is considered high risk, and Lloyd's writes a fifth of the industry. Other types of risks that Lloyd's writes would be something like a hole-in-one contest or Bruce Springsteen's voice. They've known for big losses and big gains. All right, now I'm going to jump into just some of the common types of marine insurance and its role in the marine trades. Hull and machinery coverage, something that anybody with a ship or boat that has had insurance before knows well. This is property coverage. It covers the physical loss and damage to the hull, rigging, and machinery of your ship. These losses are covered from explosion, fire, and perils of the sea. There's two types of value that we talk about when we're working with hull and machinery. First, we're talking about actual cash value. What actual cash value is the replacement cost of your vessel minus depreciation from age. The other type of value that we see is something called agreed value, which is much more common in the marine market. Agreed value is a predetermined amount that you write and make an agreement with the insurance company at the beginning of the policy. There's no depreciation for age. The boat is insured for that much value and throughout the term of a policy. There's some really important exclusions in hull and machinery coverage. Wear and tear is a normal exclusion found in most policies. War risks, piracy, a very common thing in today's market, is usually excluded on marine policies. Negligence, lack of maintenance is an exclusion on a marine policy for hull and machine coverage. Failure to seek protection from peril, which means if there's a hurricane coming, the boat needs to be moved to a safe location. That is an exclusion on most hull and machinery coverages. Finally, latent defects. The insurance company is never going to pay out a claim for a defect of the boat itself. Who needs this coverage? Basically, anybody that's trying to insure their boat or vessel or any property. This is typically the boat owner or the captain of the boat who's also the boat owner. The next type of insurance I'm going to talk about is something called protection and indemnity. This is the liability coverage inside your marine policy. Liability coverage covers third-party liabilities, which are specifically named in the policy. Basically, this covers the physical well-being of people on board your vessel, damage to other vessels, diversion costs, which is the cost of going to safe harbor and getting your crew and supplies back to where they're supposed to go, wreckage removal and salvage, and pollution cleanup costs. Common exclusions to this type of thing, or this type of coverage, are unlawful behavior, fraud, towing, which can be added as an endorsement for the towing companies, commercial diving and overboard activity, which is something we see commonly in Newport Harbor. All charter boat operations are typically excluded from any type of swimming or overboard activity. And a trip down the docks right now in Point Judith, you would find that most of the dive charter companies are no longer running either because of the excluded activities. Other exclusions: detainment by civil authority, breach of contract, liquor liability, and pollution. Here, liquor liability is typically a coverage you would place in another policy. And pollution can be covered, but typically it's just the cleanup cost. It is never a coverage for the fines or from civil authorities over that pollution. Who needs this type of coverage? Anybody running a vessel of any size should have protection and indemnity coverage. Bumbershoot excess. What a bumbershoot excess policy is an umbrella. It's an additional level of liability coverage provided by an additional premium. Typically, this is in a $1 million, $2 million, $3 million levels over your existing liability coverages. Who needs this coverage? Typically, we see this in companies or operations that face significant liability risks. If you're a multiple boat owner, your boat is of a high value. If you are in a higher risk liability or liquor liability exposed business, it's always a safe idea to throw a bumbershoot excess policy over your coverage. One reason for this is the average claim involving a death on board a marine vessel, wrongful or not wrongful, is typically $1 to $10 million. This includes the extensive litigation costs. Professional liability. This isn't a very common coverage in the marine market, but it's a great coverage to talk about today to this audience. Professional liability covers errors and omissions in your professional service. If you are an independent contractor, this is an important coverage to have as a captain. It provides funds for defense in civil and federal judicial systems. There are some common exclusions. Claims between two parties who are insured under the same policy are excluded. Dishonest, criminal, fraudulent, or malicious acts are excluded. Bankruptcy, insolvency, liability of others assumed under contract is all excluded in professional liability policies. Who do we typically see that this policy is geared towards? Typically, we see this geared towards independent contractors who are captains, yacht captains, professionals working as independent contractors, delivery captains, yacht brokers who find themselves driving vessels that aren't under their ownership. These are all the types of people that we usually see purchasing this type of coverage. Pollution liability. Pollution liability covers claims from third parties against bodily injury and property damage caused by hazardous waste materials that are released during the operation of that business. This isn't typically a coverage that you see as a standalone policy. It's often added on to the back end of a policy. There's some common exclusions here. Gross negligence, normal wear and tear, unlawful acts, and acts of war and terrorism are all common exclusions on pollution liability. Who do we typically see this coverage being placed with? Marine contractors, manufacturers, merchant marine commerce operators. Often we see pollution liability in something called a buyback endorsement. Basically, this type of endorsement removes the exclusion that is typically found on your protection and indemnity policy. Some other basic types of marine coverages. Marine operators liability, something we also call as Bailey's coverage. This covers the properties of somebody else, the property of somebody else while it's in your care and custody. Who do we see that needs this coverage? Marine contractors, marine artisans, and yacht brokers. This is a common coverage that we see in our local area. An example I like to use is with your marine contractor. Typically, the last guy off the boat, if he is doing work on that boat, has the care and custody of that vessel until it is given back to the owner. So if a boat were to sink in a slip overnight and an electrical contractor happened to be on board the day before, typically we see the marinas try to put that loss, even if it had something to do with them, on the marine contractor. This is the type of coverage that protects those marine contractors, artisans, and yacht brokers from this type of claim. Business income coverage. This is a common coverage commercially across the board, but it has a place in the marine market. We don't see a ton of it, but it's very important and it can be very valuable to an operation. Basically, business income coverage provides financial relief for lost wages, lost revenue due to a covered claim on a property policy. In a typical commercial coverage, we write these in a third of the revenue that operation produces over the year. What this does is it provides lost wages and revenue during a time period while you recover from a loss. Who needs this coverage? Anyone who requires a fully functional vessel to continue their operations. Freight, demurrage, and defense liability. This is not something that we typically see in our office, but it is an important coverage. This is a legal cost insurance. It provides coverage to ship owners and operators for legal costs incurred in relation to disputes that they are uninsured. Typically, we see this type of thing with cargo claims where there's multiple parties who have a vested interest in the cargo of the vessel. All right, this brings me on to part 3 of my presentation, which is the workers' compensation aspect of the marine coverages. Today, I'm going to talk about something called the United States Longshore and Harbor Workers Act. What this is a federal workers' compensation law that was designed to fill the gaps between state workers' compensation coverage and Jones Act coverage. This applies to any maritime employee who work on or over the navigable waters of the United States. It's regulated by the Department of Justice, as well as the Department of Labor. Typically, with workers' compensation, states govern their own workers' compensation laws. While many states use a common set of laws, there are states that have their own sets of laws. Some states allow for concurrent coverage between the Longshore and Harbor Workers Act and their own state programs. Who uses US L&H coverage? Well, mostly wharf employees, stevedores, marine artisans, shipbuilders, marine construction, casual visitors on a vessel, and dredge operators. That list requires a little more detail. Basically, anybody that's involved in the repair or construction of commercial marine vessels over 65 feet require US L&H coverage to cover their workers' compensation claims. Sometimes we see dredge operators that are able to apply for this coverage if they're typically working inside the confines of the navigable waters of the United States. The casual visitors that I'm referencing are union representatives and insurance claim representatives that find themselves on top of a vessel and are injured. Where does this coverage apply? Basically, the majority of it is found on people that work adjacent to the water in wharfs, piers, and marine railways. However, we do see that a lot of this coverage also applies within the ocean, bays, lakes, and rivers of the navigable waters of the United States. What does this coverage provide in the event of a claim? Well, US L&H coverage provides 2/3 of your weekly wages to an individual. If that individual were to pass away, the surviving spouse and dependents would also receive 2/3 of that weekly wages. The little trick about that is those benefits extend until the death of that spouse or dependents. However, if that spouse is to remarry, she is no longer qualified for those 2/3 weekly wages. US L&H also provides weekly allowance during rehab and therapy. If you have a loss of wage earning capability, AKA permanent disability, US L&H provides coverage for the rest of your life. It also is found to cover attorney costs because there is a lot of disputes between business owners and insurance companies and employees in these events. What are the exclusions of US L&H? Well, sailors, seamen, masters, crews of any ship are typically excluded on a US L&H policy. Federal officers, state or municipal employees, vendors delivering goods to a ship, clerical employees, they're also typically excluded from coverage under this. Excuse me. Yacht clubs, camps, recreational marinas are also typically excluded under US L&H. Where their coverage is usually found is under state programs. Aquacultural farmers, oyster farmers, they also typically do not find coverage under US L&H and have to rely on state programs. Ship repairers, contractors, artisans on vessels, commercial vessels less than 65 feet are also now excluded on US L&H policies. This is a recent change due to high volume of claims. There's some really important consequences if you are in violation of US Longshore and Harbor Workers Act. As an employer, you are required to place US L&H coverage if you have that exposure. US L&H is governed by the Department of Labor and the United States Department of Justice. All employers who work into the parameters of US L&H are federally mandated to purchase US L&H coverage. Employers who do not purchase US L&H cannot defend themselves in court through claims of employee negligence. What does that mean? If you do not have US L&H coverage in place, it does not matter if your employee was being negligent when he was injured. What happens if you do not have US L&H coverage in place? Heavy fines of $1,000 a day for every day not covered on those exposures, or federal imprisonment up to 12 months, as well as all the legal fees involved in any cases in dispute of US L&H. That brings me to the Jones Act, an even more important part of insurance for everyone on this presentation. What is the Jones Act? Besides what we all know about the Jones Act as far as commerce, the Jones Act provides sailors, seamen, and crews of ships additional rights, including the ability to seek damages from the crew, captain, or ship owner in the case of an injury. If you have a crew on a ship or on a vessel that you own, and you are worried about injury, you need Jones Act coverage. That Jones Act coverage is placed under something called crew liability. It covers seamen. The definition of a seaman, anyone who spends 30% of their time on a vessel in navigation. It covers all employee injuries that occur underway on a commercial vessel. If this is not added to your protection and indemnity policy, you do not have coverage. Crew liability must be added separately and carries a separate premium. What does the Jones Act provide? It provides transportation, wages, maintenance, and cure. Transportation and wages means that if you're injured underway, you're paid for the remainder of that voyage and you're brought back for aid. Maintenance. Maintenance is the seaman's daily living expenses. Cure. The Jones Act provides maximum medical cure. That includes room and board equal to that provided while underway in the vessel. An important aspect of maximum medical cure means that if you're injured and you have Jones Act coverage that protects you, then that coverage extends until every possible thing has been done medically to cure you of that injury. Some other important aspects of the Jones Act. Negligence of an employee is not a factor in Jones Act coverage. It covers any injury on land or sea while performing actions in service. Often in claims disputes involving the Jones Act, we run into something called the doctrine of unseaworthiness. Typically, one would think that unseaworthiness would only be about the actual physical condition of a vessel. That's not the case. The doctrine of unseaworthiness can also mean that the vessel and the crew are not reasonably fit for the intended use or duty. It's a very broad term in federal court. If you were able to prove that A, the physical condition of the vessel was unseaworthy, or that the vessel and crew were not reasonably fit, you're able to get pain and suffering, lost wages, and other benefits that can be awarded. I must emphasize that the interpretations of this in federal court are very broad and are typically written on a case-by-case basis. Finally, a quick look at the current landscape of the marine insurance market. Right now, we're in something called the hard market. The differences between a hard market and a soft market. In a soft market, insurance companies are willing to write numerous risks for low premium. Right now, that is not the case in the marine industry. Right now, we are in the grips of a hardening market. The reason for this? The increased frequency of weather events, piracy, a boom in the recreational boating marketplace, increased cost of claims, and increased cost of litigation. A little more detail into these items. The hurricane events that ripped through the Caribbean have had a devastating effect on the current marine insurance market. Piracy, which is no longer simply off the coast of Somalia, is having a very rough effect on the marine insurance market. The boom in recreational boating marketplace, something that none of us saw coming in a global pandemic, has increased the number of boaters in the water, but has not increased the amount of experience in the population of people using their boats. Possibly a good solution for that would be for them to all also get their captain's license and join this association. Increased cost of claims is also something I think we should talk about. Typically, the technology has become so advanced on our vessels that what used to be a small claim has now turned into a giant claim. The average cost of a lightning strike in Florida, for example, used to be about $35,000. Today, it's over $115,000. And that is we're talking about smaller vessels. Computerized systems, engines, all linked in smart systems mean that claims can spiderweb throughout the entire boat. Also, the value of cargo is an increased cost of claims. Typically, there's lots of losses involving container ships, but now those container ships are carrying more and more valuable cargo. Those losses have become much more dangerous for marine insurance carriers, and they're tightening their market on it. Finally, the increased cost of litigation. Lawsuits, defense, and fighting for benefits under an insurance policy, like everything else in the world, has become more expensive. So what are the results of this change in our current market? Well, for one, the smaller market of carriers willing to write marine insurance coverage. Many carriers are abandoning the marine market. Some of these names are names that typically wrote vessels for years, decades. Geico has just recently pulled out of the charter business market in the local area. Alliance has pulled out most of their commercial market, especially in the charter market. And Pantanius, who was very good at writing the more unique risks in the commercial marine market, were all dealt devastating blows in the British Virgin Islands and Puerto Rico by the hurricanes. They, rather than went into insolvency, they have stopped writing in the United States marine market. The other results of the current landscape is extensive and intensive underwriting. There's many more requirements for a policy commercially and recreationally for boat owners. Typically, this means that if you own a boat and you don't have a survey within the last 3 years, it'll be very challenging to get the full value of your vessel written to an insurance policy. If you don't have a survey within the last 5 years, there's a very small chance that you'll have any coverage placed at all. Here, I just put a couple more sources of additional information. United States Department of Labor offers extensive Q&A involving the Jones Act and the LHSA. The Maritime Injury Guide also offers some really good resources, and it is very important so you can see where your coverages apply to your exact business. And I'm willing to take some questions, but if anybody has any really unique questions in the insurance industry, we typically don't like to give the wrong answer. So those questions can be emailed to me personally at the address that I've listed here.
So if you have any questions for Brendan, you can feel free to just unmute yourself and ask away. Or if you rather, you can send them directly to Brendan himself. His email is up on the screen. We'll also be posting this whole presentation or recording to the website once I download it and post it. So does anyone have any questions?
Brendan, it was really informative.
Yeah.
Thank you. You can take a doctorate in some of this stuff. So I hope I provided a good outline, but there is extensive details, especially when you get into Longshore and Jones Act coverages. And I highly recommend, if anybody is really interested in learning about that type of thing, dive in, because there's a lot of good stuff on the internet about it, and it's really important to know. And personally, through who I write is insurance, I have to explain to a lot of my clients the importance of placing Jones Act coverage on their vessels, even if they're just a small charter boat operator with a 16-year-old kid that cuts bait on the back of the boat.
I also found it really interesting when you were talking about I didn't know the founding of Lloyd's. That was just a nice little tidbit of information.
Good history lesson, Brendan.
Started. Yeah, I got started in a coffee shop. That was really interesting.
Yeah, I enjoy. I studied history in college, so that was it's really fun stuff to learn about. And
how did we get here?
I didn't really get into some of the dirty details of Lloyd's, but I won't lie, it was more of a gambling den at the beginning of its foundation until the British government stepped in and created a more standard system. But they are the birthplace of the modern insurance agency, and they had a network across the globe of insurance agents that were licensed by the British Empire.
Very interesting. Did you say Geico is not offering coverage for small biz chartering anymore? Someone asked, and I believe that is correct.
What I've found is Geico has not renewed, I would say 95% of their charter policies in the region. And this was something that happened on the West Coast over a year ago, but it's just starting to hit the East Coast as well.
Yeah, I know some small boat captains as well. I think actually members of the PCA were mentioning that as well, that they were dropped from the Geico coverage.
But if anybody has any problems getting policies, I would love to help you out.
Yeah.
We have
Well, there's
solutions.
Pam Adams. Yeah, please get in touch with Brendan. He can talk you through anything you need.
Brendan, you get a live one.
Yeah. You can get one, Pam, with Carey, Richmond, and Viking. So you can reach, yeah, Brendan's your guy here. If we don't have any last questions, maybe Ed, I'll turn it over to you and you can wrap up and we'll
Yeah,
give
no, I just
everyone their
again,
evening.
no, thank you everyone for,
Yeah, I'm not-
for spending your time.
we do
Or
have a
if you
question.
Go
We
ahead.
do.
Can you hear me?
Yes.
Yeah.
Yep.
Yeah, this is Gift Plume. So I have a question on the professional liability. What is it? You know, boats can be very expensive. What's a typical ceiling on that professional liability? Like, what would be a typical policy in terms of amount? In other words, amount of coverage, and then how much does that typically cost?
To be completely honest with you, I don't write a lot of it myself. The limits would probably be around the 1 million, 2 million range. But I typically have not found a lot of people locally. However, I do think there are a lot of local captains that should have that type of coverage in place. I know plenty of delivery captains myself that probably don't have that type of coverage. And what you would find with a delivery captain is if that delivery captain were to miss a channel marker somewhere and the boat was to be wrecked, the owner of that boat's policy would most likely not cover or would try to find every way possible to get out of covering that loss. So they may go personally at the captain who was licensed or who was contracted to do that delivery. So professional liability covers your errors and omissions professionally. And it would offer some levels of protection for that coverage. But I could look into it for you and I'd be happy to. But I don't typically know what the premium costs are for that type of coverage.
Okay, I'll take it offline and email you a kind of more detailed scenario.
Sure, I'd love to take a look at it with you.
Final
Well, that, are
questions
there
or
any more
comments?
questions? Yeah.
Yeah, and unfortunately, I missed the beginning because I had a hard time getting on. But what I saw was excellent, and I got in through the part I really needed to see was all the insurance. So nice job.
Yeah, if you missed us in the beginning, sorry, we had some technical difficulties with the Zoom link we had provided. So I'm glad people were able to get here eventually. This is being recorded and it will be on the same place you signed up, probably first thing tomorrow morning.
Yeah, again, I just want to thank the PCA for the opportunity, and I am joining the PCA myself as I am a licensed captain, and I find that it's a really smart idea and a lot of value in there. So I appreciate the opportunity and I like what you guys are doing, and I look forward to being a member.
Great. Love to have you, Brendan. I think that if there's no other questions, I don't see any in chat and no one speaking up. So I think with that, I'd like to thank everyone for joining us tonight on behalf of the PCA, of course. Be on the lookout for your emails for details on our next seminar, Pro Series seminar. And of course, you can reach out to me directly if you have any questions about the association. It's ed@procaptains.org. Again, it's ed@procaptains.org. So thank you again. And with that, I think we'll say good night.
Good night, everybody.
All right, thanks.
Good night.